What American banks are quietly doing right now to senior account holders is something that millions of older Americans have no idea is happening, and by the time most people find out, it is already too late to do anything about it. Banks across the United States are implementing new account restrictions, new verification requirements, and in some cases, outright bans on certain types of transactions that disproportionately affect seniors. And they are doing it without sending clear notices, without holding press conferences, and without making sure their customers fully understand what is changing and why. If you have a bank account, if you receive Social Security into a bank account, if you have savings at any financial institution in this country, you need to watch this video right now and then pass it to every senior, because what I am about to share affects tens of millions of Americans and almost nobody is talking about it openly. Stay until the very end because I am also going to tell you exactly what you can do to protect yourself and your money starting today. Welcome to Anderson Report, the channel that cuts through the noise and gives American seniors the straight truth about what is happening with their money, their benefits, and their financial rights. If you are new to this channel, please subscribe right now and hit the bell so you never miss information this important. Let us start with what is actually happening inside American banks right now. Over the past several months, major financial institutions across the United States, including some of the largest banks in the country, have been rolling out what they internally describe as enhanced fraud prevention protocols. On the surface, this sounds like something designed to protect customers, and in some ways it is. But the practical reality of how these protocols are being applied is creating serious problems for older Americans who have done absolutely nothing wrong and who simply want to access and use their own money the way they always have. The first and most widespread restriction involves large cash withdrawals. Banks are increasingly flagging and in many cases blocking cash withdrawals above certain thresholds, particularly for customers who are over the age of 65. Some banks have set internal systems to automatically flag any single cash withdrawal over $1,000 made by an account holder in this age group. When a transaction is flagged, the bank may place a temporary hold on the withdrawal, require the customer to answer detailed questions about why they need the cash and where it is going, or in some cases, refuse the transaction entirely until a branch manager reviews and approves it. Many seniors have walked into their own bank branch, attempted to withdraw money from an account they have held for decades, and been interrogated about their personal financial decisions as though they were suspected of wrongdoing. This is happening in banks across the country, from large national chains to regional institutions, and it is causing enormous frustration and distress among older customers who feel their independence and their dignity are being undermined. The second restriction that is spreading rapidly through the American banking system involves wire transfers and electronic payments to new recipients. If you try to send money electronically to someone who is not already an established recipient in your account history, many banks are now requiring you to wait a mandatory holding period before the transfer goes through, sometimes 24 hours, sometimes 72 hours, and in some cases even longer. Additionally, some banks are requiring seniors to come into a branch in person to authorize wire transfers above certain amounts, even if the customer has been making electronic transfers from their account for years without any issues. For seniors who live far from a branch, who have mobility limitations, or who rely on online banking specifically because visiting a branch is difficult or impossible, this requirement creates a serious practical barrier to accessing and managing their own money. The third area where banks are imposing new restrictions involves joint accounts and power of attorney arrangements. Many seniors have set up joint accounts with adult children or have granted a trusted family member power of attorney to help manage their finances. Banks are now applying much stricter scrutiny to transactions made under these arrangements, sometimes freezing accounts or blocking transactions entirely while they conduct reviews that can take days or even weeks. While the stated reason is always fraud prevention and elder financial abuse protection, the reality is that legitimate family financial arrangements built on years of trust are being disrupted, sometimes at exactly the moment when seniors most need access to their funds for medical bills, home repairs, or other urgent expenses. The fourth restriction is perhaps the most troubling of all, and it involves the reporting of senior account holder activity to Adult Protective Services. Under laws that have been expanded and updated in recent years across multiple states, bank employees who observe what they determine to be signs of financial exploitation of a senior are required or in some cases permitted to report those concerns to Adult Protective Services without the account holder's knowledge or consent. While the intention behind these laws is genuinely protective, the application has been deeply problematic in many cases. Seniors have had their accounts frozen and their financial independence severely curtailed because a bank employee made an incorrect judgment about a completely normal transaction. Recovering control of a frozen account can take weeks and requires navigating a bureaucratic process that is confusing and stressful even for younger people. Now let us talk about what you can do to protect yourself. The first step is to know your rights under federal law. Under the Electronic Fund Transfer Act and other federal consumer protection statutes, banks are required to provide you with clear notice of any changes to your account terms and conditions. If your bank has implemented new restrictions that were not disclosed to you, you have the right to file a complaint with the Consumer Financial Protection Bureau. You can reach the CFPB at consumerfinance.gov or by calling 855-411-2372. The CFPB has authority over all major banks and financial institutions in the United States and takes complaints about unfair account restrictions seriously. The second step is to have a direct conversation with your bank. Go into your branch or call your bank's senior customer service line and ask them specifically what transaction limits, withdrawal restrictions, and reporting protocols apply to your account. Ask them to provide this information in writing. Knowing exactly what rules your bank has in place means you will not be caught off guard when you try to make a transaction and find it blocked or delayed. The third step is to consider diversifying where you keep your money. Having all of your savings and income in a single bank account at a single institution creates a single point of vulnerability. Consider spreading your funds across more than one institution. Credit unions in particular tend to have more flexible and customer-friendly policies than large commercial banks, and as member-owned institutions, they have a different relationship with their account holders than a publicly traded bank does. The fourth step involves your power of attorney and joint account arrangements. If you have a family member who helps manage your finances, make sure all of the relevant documentation is fully up to date, properly notarized, and on file with your bank. Outdated or incomplete documentation is one of the most common triggers for account freezes and transaction blocks. Have your attorney review your power of attorney document to ensure it complies with the latest legal requirements in your state. The fifth step is to stay connected with your account activity every single day. Set up text or email alerts for every transaction on your account so that if anything unexpected happens, you know about it immediately. The faster you identify a problem, the faster you can act to resolve it. Most banks offer these alerts for free, and they can be set up through your bank's website or mobile app, or by calling customer service and asking a representative to help you set them up over the phone. The sixth step is to know where to turn if things go wrong. Beyond the CFPB, the American Association of Retired Persons, better known as AARP, operates a fraud helpline at 877-908-3360 that can provide guidance if you believe your bank is treating you unfairly. Your state's banking regulator is also a resource, and your state attorney general's office has authority to investigate banks that engage in discriminatory or abusive practices against older customers. Your money is yours. You earned it. You saved it. You have every right to access it, manage it, and use it according to your own judgment without being treated as a suspect or having your decisions second-guessed by a bank algorithm. The changes happening inside American banks right now are real, and they are affecting real people every single day. Being informed is your first and most powerful line of defense. Please share this video immediately with every senior in your life. Post it to your Facebook page, send it to your family group chat, show it to your neighbors, because this is information that every American with a bank account needs to have. At Anderson Report, our commitment is to make sure that American seniors always know what is happening and always know what to do about it. Subscribe to the channel today, and we will see you in the next video.